Hello, I'm Stewart Heath, CEO of Harvard Grace Corporation, where we provide finance and operations executive leadership tailored to your organization. In this week's, the final segment in the planning and forecasting series of metrics all business must monitor, we're going to talk about tax burden. And because this has to be in your modeling process. Every business has a tax burden. Every person in our organization pays taxes at some level. And so you need to do your financial modeling and forecasting down at this kind of level. Everybody knows about income tax, whether it's corporate tax or pass-through individual income taxes. We all know about that. That's what you hear about all the time. If you're a sole proprietor, you've got the self-employment tax, which is your replacement for Social Security and Medicare. But there's many other taxes, and they heavily depend upon your local area. So let's start from the bottom up. Your local area in some states may have an income tax, may have a payroll tax. In Tennessee, we have what's called business tax, which is basically a gross receipts tax. That tax is duplicated in many other states and cities all around. You're going to have personal property tax as well as real estate property tax. And then as you move on up to the state level, you'll have usually state level corporate taxes, but those can vary. Maybe you're in the transportation business or you consume a lot of fuel, so you're going to have fuel tax. And with a lot of these taxes, there's corresponding credits, so you can have fuel tax and fuel tax credit. If you're in the food and beverage business, then you know about alcohol tax. All of these things have to be estimated. And then moving on up into the federal level, there's of course income taxes, which are highly complex, and your model needs to pick up not every single little detail, but it needs to be flexible enough that as your business changes, maybe your income tax is particularly dependent upon one line of your business, so your income tax needs to be flexible to that in your modeling. This sounds very boring, and it can be tedious, but it's critically important because I want to stress again the need for constant forecasting and modeling of your business, and on at least a quarterly basis, but more likely a monthly basis if your business is of any size at all and varies a lot, which everything seems to do these days. So as a part of closing your monthly financials, you also then want to update your forecast and look at any of the historical trends and see if that changes any of your assumptions going forward. So there's a lot of work in building the model, but usually the model will stay with you for a time and you can tweak it along the way. Anyway, thanks for listening. If we can help you with planning and forecasting, please let us know. Thank you for watching.